Hey, good evening, traders. I thought it'd be worthwhile to bring you a special midweek update on the Bitcoin, being that we are in some very tenuous area, very uncertain. And again, I don't know many pros who can say with conviction that we are A, either going up, or B, we are going down. Everybody is fairly uncertain, and when you're uncertain, you play it defensive, right? And so for that reason, the candles are not moving very rapidly, giving us an idea of where we're going to go in either direction. And we have still, I'm going to jump to the charts here, have not confirmed any move below our line in the sand, that ever present support, multi-year support from October of 2019. And today we just closed back above it. So we broke below, confirmed, but confirmation comes on the second candle, as I always say. And really with cryptocurrency, sometimes you need 3 candles because it's open 24/7. It's not like you have an open and close in the market. So for that reason, I do like to take my time before I open or close positions above significant areas of support or resistance. Sometimes crypto doesn't give you that time. And so there is a lot of FOMO here, a lot of fear, a lot of uncertainty, a lot of people saying that the market's going to crash, a lot of people saying that the market's going to pump, and good people on both sides. But if we all just take a step back and try to be as honest as possible with ourselves, based upon this price action, I really don't know that you can have strong conviction either way. Especially if you have been following my videos. I've talked about this line forever. And I said once we break below, that's when I become a bear. However, there's a new indicator that has entered the calculation, the formula as a variable, and that is this descending wedge. All right, one of my subscribers, paid subscribers in our paid subscribers group, we like to shoot different ideas back and forth, just like we do here on TradingView, but it's a little bit more of an intimate feel. We're chatting back and forth live, and you know, hopefully my subscribers feel open about being able to share ideas, even if they don't know if it's a legit idea or not. That's the purpose of the group, is just to create a space where that type of those type of questions can be answered without fear of being ridiculed or, you know, mocked in any way. There's no trolls in there. We're all trying to help each other out. So paid subscribers, there are many of my paid subscribers who are still not in this group. If you're listening to me right now, please, I'm going to put a link in the description. Please feel free to join on Telegram. All right. We've got a good group of guys, but there are so many of you guys that pay for the subscription that are not a part of this. And I think it's such a benefit for those of you that pay to be able to live time, you know, shoot these things back and forth at each other and see what the sentiment of the group is. Enough said about that. What I'm seeing here, guys, and the reason why I feel I wasn't going to actually put out a video tonight, because we did close back above this ascending trend line. All right, so that puts me safe in the territory that I was on Monday, with my bias being bullish. All right, So really nothing has changed. And we're sitting directly on. I love how Bitcoin loves to play with us. This purple support, 39,300. Look at the price, 39,338, 33. I mean, it's right on that line. I don't know what I'm going to do, says Bitcoin. But overall, I'm still have to lean bullish because I am on the top side of this ascending black line. All right, we're on the top side of this, and we're actually above 39,300 as I speak. Probably will dip below it before the video ends. That's bullish. And we're also in a descending wedge. That's bullish. And we haven't broken below the descending wedge, and we haven't broken below this red line. I want to show you something here. I'm going to zoom out. See these red circles? All right. These are all the different times that we have, intervals that we have touched on this line, used it as support. First time we broke really hard down, we had a red candle like this that broke down below this ascending black line, but then the next candle, the green candle, closed back above, just like we did today. All right, so we have not, in this situation, what's the best way to, we just continue to follow this line up until I see us close below, really close below that red line there. Not just drop below this descending wedge and, you know, these purple lines here. Not just drop below that, but close actually below this red line here. Until I see us close below this, I can't go bearish. All right? So I know we're getting teased. I know there's a lot of fear out there. I see it in the comments. In fact, I got another message here. Probably somebody is saying Bitcoin's going to crash. I get that all the time. I mean, it's nonstop. So the fear is high. And when the fear is high, I can assure you that the whales are buying. Now, they may not buy all at once. They may say, well, we could go up. I'm going to buy a little here, and I'll dollar cost average in if it goes down more. That's what the smart money does, right? But I can assure you the whales are buying. All right, the other thing I want to point out, I don't know where I found this, but it was about a week ago. All right, I'm going to expand this. Bitcoin in 2015, this looks very similar. See this head and shoulders pattern over here I drew that I negated months ago? I boldly came out and said, I'm going against the 85% probability that's going to drop. All right, well, in 2015, apparently, we did have something that looked just like this over here. All right. And we had one of these flags, much like we're in right now. That's that whole red area behind the image. All right, we're in that right now. And then we dropped out of it, but we didn't drop that far. We didn't drop that long. And then immediately thereafter, massive bullish action occurred. All right, so here we are in 2022. Same exact pattern, guys. Same exact pattern. So we could actually drop out of this area of FUD. That's what I've been calling this whole red flag here. We could drop out of it. But if we do, maybe we don't drop out of the wedge. Maybe we just continue to stay inside this wedge, all right, all the way down to our support, which is 100% retracement from March 14th, and then we move up, all right, until we actually drop below in this area here. I am not bearish. I'm not going to go bearish. I'm not even going to sell. That's just me. You're not wrong to sell if we come below this black. You're not wrong. I'm not telling you you're wrong. There's no, in this situation, I don't think there's any wrong choice. We just, there's too much uncertainty to really have strong conviction in any direction. All right. But this is, if we stayed in this descending wedge, which is a bullish pattern, it could look very much like what it looked in 2015. We could drop below the descending black line and still be bullish. And that would match with our 2015 pattern. All right, I'm going to delete this. All right, so you see what I'm saying, guys? It's just there's not enough indicators here to tell me to go bearish yet. I can't sell. I can't recommend selling. I can't say we're bearish. I can't say we're going to 35,000, or some people are saying 24,000, which would line up with my head and shoulders pattern and the target down. But as you know, I don't believe that's a legit head and shoulders pattern. I've been saying it all along. I don't believe we're going to 24,000. Even if we drop below this red line, even if we start descending down, I still don't think the bears have enough to take us down to 24,000. Now there's a couple more variables that we have to include here. And I don't want to get long in the tooth on the midweek video, but let's take a look at the dollar real quickly because there's something I want to show you. All right, so right now the dollar, this level of resistance at 103 has not been hit since 2017. All right, this is not 103. This is when we hit 103. Okay, that was the end of 2016, the beginning of 2017. Now you see this descending black trend line coming down? That actually could be a target, but it has not been hit. It has not been touched for 20 years. The dollar has not been that strong. So this strength right here, this is deflationary pressure. Why do I say deflationary? Some people still don't understand the correlation between dollar strength and deflationary pressure in the market. Inflationary pressure means the dollar is losing strength. So when the dollar loses strength, it takes more dollars to buy a bottle of wine or a gallon of gas at the pump. That is inflation. Why is the dollar getting stronger here? Well, there's two big reasons. I mean, obviously, Jay Powell and the Fed are threatening to raise interest rates, which I don't know, and I've said before many times, I doubt sometimes that that's going to happen. Now, they've been threatening more seriously lately, which has made me a little bit hesitant on my original statement that there was only going to be one interest rate increase this year. And so maybe May 4th, May 5th, whenever that date is for the next increase, maybe they do raise the interest rates. But I don't think they're going to raise them as rapidly as what the market is pricing in right now. All right, so when the dollar is strong and it strengthens by the Fed increasing that interest rate, all right, because remember, we are measuring this fiat currency, the US dollar, against global fiat currencies, and the whole globe has gone insane with their fiat currency just printing at the press, all right? So really now it's the rate of printing. And if we slow down the rate of printing, our dollar grows stronger against other global fiat currencies. All right. So this has to be priced into the indexes and into the market. When the dollar goes strong, it takes less dollars to buy wine or a gallon of gas, whatever you're buying, it takes less dollars. And when the dollar is weak, meaning this index here goes down, then it takes more dollars. Right now, this is the strongest the dollar's been since almost 2017. And if we move up above this 103 resistance, we're getting into territory that we have not been for 20 years, believe it or not. That is how strong the dollar is. This is all being priced into the market, which is spilling over into our crypto. All right. So I have a sense here that we hit this 103 level resistance, and I have a sense that we're not going to just smash through that. We make a U-turn there. That gives the market a break, all right? And maybe we come down to this support. I said before that we're going to come back down here, but now that looks doubtful because of how much we have just continued to move up. So maybe we move down to that $100 or that 100, yeah, the 100 point level. I don't know how I should express it here. But that gives the market a breather, a chance to rest. What we are seeing is the VIX is taking a little bit of a pullback. All right, well, at least it is expressed by a negative 5% a drop today. But this is also looking like a bullish flag, so that's not... Guys, I don't know, man. It's just a situation that is very tenuous, and it's all resting upon what the Fed does, quite honestly. So we have to watch the dollar very closely and price that into our valuation in crypto, because all of this spills over and decreases the price overall of Bitcoin against the dollar. All right, so anyways, back to Bitcoin. That's the way I see it. Again, we are still, let me zoom in here one last time, conquering right now. We're working on this 39,300, and if we can close this candle above that 39,300, well, then now we just have to defeat this descending trend line, and we're popping above this bullish wedge. And then, you know, everything I said on Monday has not changed. It's just looking uncertain, and there's a lot of fear. So I'm bringing the midway update basically because of how many comments I'm getting about we're crashing, people panicking, etc., etc. What am I doing? I haven't sold. In fact, those of you who have been subscribed to my channel, Studom.us, know that I just bought something yesterday with 20% of my cash reserves. So I'm still buying. All right. Whoops, wrong one. Anyways, in conclusion, as I've said, we're in a very tenuous situation. I don't know pros and experts that are bullish or bearish either way with conviction. I know lots of people commenting who it carries no weight because they have no audience are saying we're going to crash, we're going to crash. Well, that sounds like conviction, but are people putting their money where their mouth is? I really don't know. You know, I try to put my money where my mouth is. We're on the top side of that black ascending trend line, so I'm long. I stayed bullish. In fact, I bought more. The market is extremely uncertain, as indicated by the VIX and the fear index. FOMC meetings on May 4th and 5th. Watch those. That doesn't help the situation. Deflationary pressures are currently being priced into the market prices and maybe overpriced in. All right. Maybe we're just, over exaggerating what the FOMC is going to do. But what if Jay Powell and company do not raise the rates as expected? Or at least as much as expected? What if Cathie Wood and others pundits are right? And Cathie Wood has been saying a long time that with the technologies that we have, that should impress deflationary pressures on the market, not inflationary pressures. So what if she and all of her cohorts who do massive research, I respect them a lot, what if they're right? And then the Fed sees this and they say, okay, well, we're not going to raise rates at least as much as we were going to. All right. If so, and then the Fed decides to go easy on the rates or even skip an interest rate raise, get ready. If that happens, it's moonshot. Everything is just going to shoot back up to where it was and higher. All right, that is my update, guys. Enjoy. Have a good week, and we'll talk to you on Friday. Peace, y'all.